Recovery of expenses. Generally, you will need to charge GST when you recover expenses from your related companies, customers, or suppliers if the expenses were incurred by you as a principal. Recovery of expenses for the purchases made on behalf of another party. Let's say MNC Private Limited is a multinational GST-registered company incorporated in Singapore, with various business arms in retail, properties, wholesale trade and technical services. RC Private Limited, a related company, asked MNC to purchase the goods on their behalf, as MNC would be able to command better prices from suppliers. RC will reimburse MNC at a later date. MNC issued a purchase order to a supplier, ABC Private Limited, and instructed them to deliver the goods directly to RC. As ABC is not GST registered, no GST is charged to MNC, the contracting party. To recover this expense, MNC issued a tax invoice to RC. As MNC entered into the contract with ABC, MNC is considered a principal, and the recovery of this expense is a reimbursement. A reimbursement is subject to GST unless it qualifies as an exempt or zero-rated supply. As this is a supply of goods in Singapore, MNC is therefore required to charge GST when recovering the expenses from RC. On a separate occasion, RC liaised with ABC directly to purchase food hampers, and ABC issued an invoice to RC for the sale. However, MNC made payment on behalf of RC first and recovered the expenses from RC thereafter. As RC entered into the contract with ABC, MNC is not a contracting party, but an agent. Having incurred the expenses as an agent rather than a principal, the recovery of these expenses by MNC is considered a disbursement, which is not subject to GST. MNC is therefore not required to charge GST in its subsequent invoice to RC. Recovery of expenses in relation to secondment of staff. When you second your staff to work for another company, there is a supply of services. Consequently, the recovery of expenses relating to the secondment is subject to GST. However, if all of these 5 conditions are met, companies do not need to charge GST when they recover expenses relating to the secondment. Here's an example. This is Joseph, an accountant who is employed by MNC. Joseph had been assigned to handle the payroll at RC for the past few months, while still handling his main work responsibilities at MNC. MNC did not charge GST to RC when they invoiced RC to recover the staff costs, as RC is a related company. This is incorrect. As Joseph worked for both MNC and RC at the same time, MNC did not meet all 5 conditions. Hence, MNC must charge GST when recovering the costs for the supply of services. If you have made errors in your GST returns, please correct the errors by filing a GST F7. For more information, please visit the Inland Revenue Authority of Singapore website. Sale and disposal of business assets. You are required to account for output tax when you sell, dispose, or transfer your business assets to another party, as there is a supply of goods. MNC sold their business asset, an old computer, to another company for $600. As the selling of computers is not their daily business activity, they did not charge GST. This is incorrect. MNC needs to charge GST on the consideration received for their sale of business asset, as it is a supply of goods. When you dispose your asset or give it away for free, you have to account for output tax on the open market value, or OMV, of the asset if the cost of the asset, excluding GST, is more than $200 and you had claimed input tax on the purchase of the asset. MNC gave away its used laptops to their staff for free. MNC did not account for output tax in their GST return, as it is not a sale of goods. This is incorrect. The laptop cost more than $200, and MNC had previously claimed input tax on the purchase. As such, MNC must account for output tax on the OMV of $500. Trade-in transactions. A trade-in transaction is treated as two separate supplies. When accepting trade-ins, you must charge GST on the full selling price of the goods and not on the net difference. MNC's retail arm sells televisions and allows customers to trade in their old televisions for a new one.
Hi, I would like to trade in my old television for a new model.
The new television model is $2,000. The old television's trade-in value is $300. Should I charge GST on the net difference of $1,700? In this trade-in transaction, Jane is supplying an old television to MNC, and MNC is supplying a new television to Jane. MNC should charge GST and issue a tax invoice to Jane on the full selling price of the new television. If Jane is a GST-registered trader and the old television is her business asset, Jane should charge GST and issue a tax invoice to MNC on the trade-in value of the old television. If you have made errors in your GST returns, please correct the errors by filing a GST F7. For more information, please visit the Inland Revenue Authority of Singapore website. Sale and lease of residential properties. The sale and lease of unfurnished residential properties are exempt from GST. If you are selling or leasing furnished residential properties, GST is chargeable on the value of the furniture and fittings in the residential property. MNC's property arm leases out properties. They leased out a furnished condominium unit for $3,500 per month, but did not charge GST to the tenant, as they remembered that residential properties are exempt from GST. This is incorrect. The lease of the unfurnished condominium is exempt from GST, but the lease of the furniture and fittings is taxable. The monthly value of furniture and fittings that is subject to GST is the difference between the monthly rental of the furnished condominium and the monthly rental of the unfurnished condominium, which is 1/12 of the annual value of the condominium. For this case, the annual value of the condominium is $36,000. Thus, the monthly rental of the unfurnished condominium is $3,000, and the monthly value of the furniture and fittings, which is subject to GST, is $500. MNC entered into a new tenancy agreement for the furnished residential property, and the new monthly rental is $2,800. The annual value remains unchanged. Since the monthly rental is lower than the monthly bare rental of $3,000, no GST is chargeable on the supply of furniture and fittings. Commercial properties used by a third party for free. If a third party occupies commercial properties owned or leased by you for free, and you had claimed input tax on the purchase or lease of the properties, under the law, this is deemed as a supply of service to the third party. The value of such services is the full cost of providing the services. MNC claimed input tax on the purchase of an office building and allowed their related company, RC, to occupy 50% of the space free of charge. MNC did not account for output tax on the free use of the property by RC. This is incorrect. Since RC is using the property for free, MNC is deemed to be supplying a service. The monthly output tax to be accounted for is 1/12 of the annual value of the property in proportion to the gross floor area occupied by RC. If MNC had rented the space from a landlord and claimed input tax on the lease, MNC would still need to account for output tax when they allow RC to use the space for free. The value of the deemed supply is the actual rental, excluding GST, in proportion to the gross floor area occupied by RC. If you have made errors in your GST returns, please correct the errors by filing a GST F7. For more information, please visit the Inland Revenue Authority of Singapore website. Goods sold to overseas customers. GST has to be charged on the supply of goods delivered locally, regardless whether the customer is in Singapore or overseas. MNC's export division operates as a wholesaler of food products. MNC has a related company in Malaysia, Arco Sendirian Berhad, that imports and exports food products. Arco received an order from a Singapore customer, but it did not have sufficient quantities of goods. Hence, Arco asked MNC to deliver the goods to the customer in Singapore. MNC issued an invoice to Arco. MNC did not charge Arco any GST, as Arco is an overseas company. This is incorrect. Since goods were delivered locally, MNC has to charge GST on the sale of goods to Arco. Exports. You can charge GST at 0% on your supply of goods when you are certain that at the time of supply, the goods supplied will be or have already been exported. You must have the required documents to support zero rating your supply. Generally, the following documents are required as evidence to zero rate your supply of goods. The list of documents needed to be maintained is dependent on the export scenario. Please refer to the Inland Revenue Authority of Singapore e-Tax Guide on exports for more details. You have up to 60 days from the time of supply to export the goods and obtain the required export documents. If you are unable to obtain the required export documents within 60 days, you need to account for output tax on the export of goods. MNC received an order from an overseas customer to supply food products overseas. Upon the customer's instruction, MNC delivered the goods to FC, the forwarding company appointed by the customer. MNC did not know when the goods will be exported by the forwarding company. MNC kept documents such as the purchase order from the overseas customer, payment evidence, and delivery note to the forwarding company. MNC did not charge GST when they invoiced the overseas customer based on their understanding that the goods were to be exported. This is incorrect, as MNC had delivered the goods to the local forwarding company and was not certain at the time of supply when the goods would be exported. They did not have the transport documents to support the export of goods overseas. Hence, MNC has to account for output tax on the sale of goods. Once output tax is accounted for the sale of the goods, even if MNC can subsequently obtain the required export evidence, they cannot nullify the earlier transaction and zero rate the supply of goods to the customer. If you have made errors in your GST returns, please correct the errors by filing a GST F7. For more information, please visit the Inland Revenue Authority of Singapore website. Services provided to overseas customers. You can charge GST at 0% for your supply of services only if it falls within the description of international services under Section 21(3) of the GST Act. It is important to note that not all services provided to overseas customers can be zero-rated. MNC provides repair, certification, and advisory services in Singapore and around the region. Mobile Phone International is an overseas company that sells mobile phones to customers worldwide. Mobile Phone International contracted with MNC to provide mobile phone repair services to Mobile Phone International's customers in Singapore. MNC did not charge GST to Mobile Phone International for the repair services, as it is billing an overseas company. This is incorrect. They should assess if the repair services meet all the conditions to qualify for zero rating under Section 21(3)(j) of the GST Act. MNC satisfies the first condition as they contracted with an overseas company. However, MNC did not satisfy the other two conditions as the repair services were provided to Mobile Phone International's non-GST registered customers in Singapore. MNC should have accounted for output tax for this transaction with Mobile Phone International. A Singapore customer requested MNC to provide certification service on water pipes located in Thailand. MNC charged GST on the service as they invoiced a local customer. This is incorrect. MNC satisfies the conditions set out under Section 21(3)(f) of the GST Act as the service is performed in connection with goods situated outside Singapore. MNC can zero-rate this transaction. On a separate occasion, MNC entered into a contract with another Singapore customer to provide advisory services on general property market conditions in Thailand. MNC will present their findings at a meeting to the customer in Singapore. In this case, MNC cannot zero-rate the supply as they invoiced a local customer and the services were not performed in connection with land or goods situated outside Singapore. If you have made errors in your GST returns, please correct the errors by filing a GST F7. For more information, please visit the Inland Revenue Authority of Singapore website.